Thank you for joining us at XM.com for this Forex Preview video. I'm Cristina Marujos, and joining me today is Senior Investment Analyst Rafi Boyadjian. We'll be looking at Canadian employment numbers out on Friday. Now, the latest data out of Canada have been strong. What can we expect from the employment report out on Friday, and what will that tell us about the broader economy?
Well, the data has been strong. We've seen the Canadian economy picking up some momentum in recent months. The jobless rate fell to the lowest since the mid-1970s back in May. It did tick up slightly higher to 5.5% in June. It's expected to hold there in July. Employment change, though, was unexpectedly negative in June. We're expecting a rebound for July. So if that positive trend continues, it's likely to continue providing support to the broader Canadian economy.
Now, the Bank of Canada has not followed its peers in cutting rates. Do you think markets will be looking closely at the employment report out on Friday, as it may give reasons to the Bank of Canada to adopt an easing bias?
Well, the jobs report will be very important to the Bank of Canada, in particular wage growth, which actually rose to the highest in a year last month. So if wages continue to rise, it's likely to push up inflation over the coming months. We already saw a spike in the CPI rate back in May before falling back slightly. The Bank of Canada isn't too concerned just yet about inflation. They think that the recent spike is only a temporary one, and in fact, in their policy statement at the last meeting, they put the emphasis on trade tensions. So they'll, even if we do see a solid set of job numbers, the Bank of Canada will likely maintain a cautious stance.
And now, what about the loonie? After a significant rise, we saw it falling recently to 7-week lows versus the US dollar. What is the outlook for the loonie?
Yes, so that the extent of the decline has been surprising, given that the Bank of Canada hasn't so far joined its peers in easing policy. The loonie has also been under pressure from falling oil prices. Of course, oil is a major export for Canada, but also suggests that traders think the Bank of Canada will be forced at some point in the future to ease policy, at least to a small extent, due to the worsening trade tensions that will eventually have a negative impact on the global and the Canadian economy.
Rafi, thank you for joining me today.
Thank you.
And thank you for watching us at XM.com.